G'day everyone, my name is Hugh,
My name is Hoi.
and welcome to another episode of FinChats. So today we're going to talk everything to do with the US debt ceiling. We're at crossroads right now as to whether Congress will raise the limit on the debt ceiling for another time, or whether a default will happen on any US outstanding debt, which has never occurred at all in history. So before I delve into this video further, we'll firstly structure our video by firstly talking about what the debt ceiling is. I'm sure some of our viewers out there may or may not have heard about what the US debt ceiling is. Secondly, why it even exists in the first place. And then thirdly, talk about the potential, ramifications and effects it has, because it can affect millions of people around the world and also institutions and corporates. So what is the US debt ceiling? Well, as it sounds, it is a amount that is set by Congress in the US as to how much the US government can borrow. So right now it's sitting at around $31.4 trillion, which is an insane amount. And the US government is about to, or has reached that capacity, it is about to reach that capacity, which is why it has been a very hot topic in the news over the last few weeks. The government is also talking about a potential default by June 1st. So we're recording as of 20th of May. So this is only a few weeks away. If there aren't any immediate sort of actions taken to address this this debt ceiling. And so why does it even exist in the first place? Well, actually, if we go back in history, during World War I, around 1917, Congress actually had to approve individual loans made to people. So over time, this debt ceiling has always been in place. And right now, questions have been raised about whether the validity of this debt is still in question.
Yeah, it's a bit strange to have a debt ceiling, right? So, for non-US people like ourselves, we don't really hear our own governments being capped at, how much they can spend. It's kind of like mommy and daddy, setting a limit of how much you want to spend. And when you're approaching that, you have to ask mommy and daddy again for extra money. And that's essentially what is happening to the US system. So, and it's quite strange. And, I was reading the only two countries in the whole world that has this kind of setup is Denmark and the US. But the difference is that Denmark doesn't have this, every so often doesn't threaten, default. And, the US being the biggest economy in the world, you can imagine that if they don't get the money or, increase the debt ceiling, it does have a large ramification, not just to the US, but to the whole world in general. So it can trigger, all sorts of stuff, which we'll cover in later. But yeah, the debt ceiling is sort of, if you think about, just running out of money and needing to ask people, hey, can I get some more money? That's essentially what's happening. And it's kind of strange to think that,
It is. Yeah. I think it is really strange. I mean, for our viewers, the way that the US or any government borrows money is by, not really going out to a bank and borrowing like us individuals, but what they do is called issuing bonds. Issuing is, you can think about it as the opposite of buying bonds. Individuals like ourselves and also corporations can buy bonds from the US Treasury or the US government. So if they needed to raise money, they'll issue bonds, and then countries such as Japan and China can buy them. And the reason why I talk about Japan and China is because they're the two largest countries that hold the most US Treasuries.
Yeah.
Right? As you said, the potential ramifications of a default, if it ever does happen, can be extremely widespread, because firstly, you have, countries holding trillions of dollars in assets. within these US treasuries. And secondly, there's also effects on capital markets because a lot of participants out there, they base the valuation of certain securities on a risk-free
The
rate,
treasury,
and
yeah, yeah,
with the rate on the treasury. So uh, if you do ever have a default, which I personally don't think that would be the case. It just seems like the the effects would be way too negative and deep for our economy to handle. But
yeah,
going back to the
yeah. I
default
don't,
happened, how do people value assets anymore when that risk-free rate is not
yeah.
really risky anymore,
Well, in if you ever do any finance course, there's a formula to find, what your future value is and of your investments are, and then the assumption of a risk-free asset is always, government bonds or securities. So if that's not the case anymore, then I wonder whether they need to change the assumption of what a risk-free asset is. But, talking about, I just want to go back to the Japan and China holding
Yeah.
that much in bonds, in US bonds. I remember, I suddenly remembered that, I heard that when you hold that much of US debt, it's not US's problem if they default. It's actually Japan and China's problem now, simply because, they hold that much debt. But I want to touch on the why it would have a devastating effect on the whole economies, not just in the US, but also the whole world. Now, what it means is, now, even if it doesn't default, it does send a negative signal to the market that it's causing, some doubt about whether the US can pay its debt, the credit worthiness of the US government, can they pay their debt? And they don't actually need to default to have a negative impact on the market. If people or institutions have a negative outlook on whether whether Congress can resolve the differences in whether to increase the debt limit or not, then markets can sell the bonds and et cetera, et cetera. So that effect obviously is not going to be as catastrophic as an actual default, but still it does have adverse consequences to the market. Now, the reason why I think it would have catastrophic effects if US were to default is, well, you think the US is the US dollar is the world's currency, world's reserve currency. And what does that mean? It means that there's huge demand for it. Whenever we import and export, a large part of that is denominated in US dollars. There are investments in pension funds held in US dollars, etc. So all those holdings, when the US defaults, the US dollar would probably crash. To what extent, I don't know. But, it would deeply depreciate.
Yeah, absolutely. I think what you touched upon is it's very important in the sense that you don't necessarily have to default in order to cause negative ramifications across financial markets. Financial markets are actually embedded a lot in what we call expectations. If market participants expect bad news, you can typically see these being reflected in asset prices or the price of a stock. For example, whenever a company reports their earnings results, whether that be every year or half a year, the market has some sort of expectation of where these earnings sit at. And it doesn't necessarily have to hit that or not, but if it goes above that sort of number, the market perceives it as good. And on the flip side, if it comes below, then it perceives it as bad. So we can think of it, those same parallels to this scenario, right? Like a default doesn't have to happen, but we've had all these talks about a potential default, and that's already affecting financial markets right now. We saw on Friday, a few days ago, markets have not tanked, but they have come down a bit. And this is all based on news of a potential lack of confidence for all market participants around the world. So,
that's right. It's if you're expecting bad news, then you're probably gonna price in bad news today.
yes.
You won't wait until you get the bad news, you know. So,
Yeah.
and that happens in the world of finance as well. But I think, you know, the average viewer might say, well, I'm sitting in Sydney. I don't really care if the US defaults or not. You know, what does it matter to me in my daily lives? It might affect the banks and financial markets, etc. But you know, I just want to touch a little bit about that, because if the US goes into a recession is basically they're not growing as much as the previous period, right? So, and if the US does go into recession, the whole world feels it. Because of how much the US it permeates throughout the world's economy. And, you know, you'll likely see the price, you know, unemployment probably hitting the US first and then affecting all the other markets. All the bad stuff will just filter through. I won't go into detail, but basically, when the US catches when the US sneezes, the whole world catches a cold. To
Exactly.
quote a you know, yeah. So that's why we care about it, and that's why we're talking about it today. So, you know, the whole world's looking at how the US Congress is progressing. But there are alternatives, you know. Just say that the Republicans and the Democrats in the US can't come together or can't come to an agreement. There are alternatives to not defaulting. They're not good alternatives, but any alternative other than defaulting is probably better than defaulting. So I just want to touch a couple of options, which is, you know, like you and me, when we run out of money, what do? We say, well, okay, well, what can we cut out of our expenses, right? So that's what the US government can do. It can say, okay, well, you know, these initiatives, these roads initiative, I'm going to put it on pause. I'm not going to keep spending on that. The hospital that we're going to build, you know, on the corner of whatever road, we're not going to build on that, and we're just going to wait for income through tax receipts to come through, and then we'll just pay, you know, the absolute necessary bills that we need to pay. That's not a great option, but it's better than, you know, defaulting. You know, it still signals to the world that you can't afford to pay your debt, and, you know, that's not a great thing.
So what I was going to say, it's almost like you have a boat and it has a hole in it, and what are you doing to sort of
yeah,
putting
exactly
in that hole? But you know, obviously that ocean is at $31.4 trillion of debt coming in, and you're just putting some sticky tape on.
It's you know what? It's basically the U.S. government living paycheck to paycheck. That's what it is, you know. And the boat is sinking, and you're just trying to manage. Yeah, it's not great for anybody. The other alternative still, which isn't a great one, is that there is a legal option. There's an amendment. I think it's the 14th Amendment in the U.S. Constitution, which says, you know, the government can raise its debt, has to pay, something along the lines of the government has to pay its bills regardless of, you know, the debt ceiling, something to that effect. Now, that hasn't been legally tested, and that's why people are, you know, cautious about, you know, using that option. So is it better than defaulting? I don't know. I'm sure it's going to be litigated in the courts, and, you know, at the end of the day, if it's going to be fought out in the legal system, it's not going to help anyone if the problem is still there, and the problem is you don't have enough money because the debt ceiling is still there.
I think you pointed to those two alternatives, to me, it sounds like the message I'm getting is that both are sort of short-term, sort of sticky tape solutions, but you're
Yeah.
not addressing the core fundamental problem, which is that you've got trillions of dollars in debt. And it also just shows that you need prudent financial management. Whether you're an individual or a business or a government, if you can't manage your debt in place, then this is a scenario that you get yourself into. And, I'm sort of forecasting a pretty bad scenario if ever this spirals out of control, because the narrative of 2021 and 2022 and also this year was that increasing rate environment. So we talked about this in our first video,
Yep.
and the goal of that was for central banks to increase that unemployment rate and keep inflation down. And so you've got that whammy effect, right? If you get more people out of work, so on the monetary side, that is called restrictive monetary policy or tightening.
Yep.
And then you have the Republicans also wanting to implement fiscal tightening. So you've got this double whammy effect if it does happen, which will be a huge tailwind, negative tailwind for the next 5 or so years, that will just shut down the economy around the world. So that's what I'm scared about. And this is why it's so important that I think we talk about the US debt ceiling. And then also higher rates mean high interest payments on your principal. That principal payment has increased rapidly, and now we've got 5% Fed funds rate, and the government and Congress is scrambling right now, scrambling to pay off interest. We're not even talking about principal. We're talking about the interest on those outstanding debts. And I think, I guess, just to sort of conclude and on this topic, this really is a political game, right? I think you mentioned, Hoi, it was something like you mentioned it was like a game theory. Where you had a split Congress that's sort of fighting it out. There are ulterior motives here that I'm sure you can talk about.
Yeah, I mean, if this was a rational decision to be made, I think, the decision to raise or suspend the debt ceiling would be made long time ago. But, with politics, everything is political, right? So, the Republicans and the Democrats, well, the Republicans in this case are trying to get a political gain out of this, right? They're not going to vote for something which makes the Democrats look good, unless they get something out of it, so they look good for in the eyes of their constituents, right? So there's a little bit of a game of chicken or brinkmanship. So they just need to, in my humble opinion, they just need to make sure that the interests of the US and the world, economy more broadly is at the forefront of their mind, and not their short-term political gain. Because when we get into a deep recession, as a default will bring upon, that's not short-term. That's going to affect real lives, real people's lives. People will be unemployed. People will be out of jobs and perhaps living on the streets, etc., etc. So, I just hope and wish that this game of game theory of where you try to insert a little bit of your own agenda to get what you want at the expense of the broader good is it's minimized. So yeah, we'll see what happens.
I agree. I think that both parties need to come to a absolute agreement to tackle this issue, because it really is not in the best interest of 99.9% of the population. We cannot afford to have millions of people unemployed, not working, able to feed their families. And I think that what we're talking about now, it could be a fiscal disaster. I think we're already experiencing a monetary, I wouldn't say disaster, a monetary normalization in interest rate settings back to that sort of neutral range at 5%. And so that's going to coincide with what financial market participants think a recession will happen in the Northern Hemisphere summer, which is starting in a few weeks' time,
Yeah.
which is coinciding with this impending default on the US debt amount. So I'm feeling a bit nervous, but yeah, as you said, I think that my hopes are that they will definitely come to some bipartisan agreement in the next few weeks. But we'll definitely circle back to this one in the future.
Definitely. And if we're not online, you'll know why. In a few weeks, if we're not online, you know that we couldn't be able to pay our electricity bills. But we hope to see
Absolutely.
you in the next video.
Right. Thanks so much, guys, and appreciate you guys tuning in. We'll see you next week.